Welcome, guys. Thank you for joining in today. This is our session 6. And today we are going to talk about bank accounts, debit cards, and credit cards. I initially thought I'll just do debit and credit cards, but then I started thinking, okay, bank accounts is pretty related. So I started putting in more slides. We will also have a quiz at the end of it. At the end of this presentation, I'll be giving out a gift card for a middle schooler and a high schooler who tops those quiz. So pay attention, learn. This will be useful for you when you grow up. Again, welcome to Moneywise Learning. I really, for those of you who haven't joined before, I think there are very few of those. You guys have been joining me week after week. So thank you for joining and thank you for having this interest to learn about your future and how to handle money. Some house rules as always. In the past, people have been spamming and chatting, and people who have done that have gotten thrown out of the webinar before. So please don't. Don't type anything distracting because everybody is here to learn and we want to keep on track. Okay. And also ask the questions in the Q&A box on top. You know where that is. Ask the questions there. Try not to type it in the chat box if you have questions, because it's very hard, because people are typing all sorts of things in the chat box. It's very hard and distracting for me to keep up. Again, we will get to the questions at the end of the discussion. No spamming, trolling, chatting. You guys know the ground rules, okay? We talked about assets, liabilities. We talked about loans. We talked about interest on money. We talked about why we need insurance. We talked last week about building your credit and credit scores with our guest speaker. Today, we're going to talk about how credit and debit card work and what we talk about some kinds of bank accounts as well. I just wanted to throw that in as an extra. This is my team. Anar is on here. She's the panelist on here. Arya, you were asking about that. And she is an entrepreneur, and she's the owner or founder of Lotus Capital. She runs the webinars for ages 5 to 10. She's also a very busy multifamily, like apartment owner. She actually manages multiple apartment buildings and works with investors all the time. I'm Kavitha Baratakke. All of you know me, I'm from Cherry Street Investments. So a quick review of the assignment from last week. Let's see how many people actually did the assignment. I'm sending a poll out. I want to really understand how many of you are actually doing this after the class. So a poll should pop up on your screen and it says, did you finish your homework assignment with your parents? Did you play the cash flow game online? So this week is pretty good. I'm impressed. The number of people who have done the assignments gone up a little bit. Only 15% of the people so far say they haven't done the assignment. So that's pretty good. Last week, I think I had more like 28%. Okay, it's still updating. I have 13% no, which is great. The rest of you have 63% have done it. And 24% has done a little bit. I will take a little bit to nothing at all, okay? Did you play the cash flow game? 37% cash flow, 42% didn't get a chance to, and 16% said yes, but I didn't like it. Fair, it's not for everybody, okay? But if you do play it, I hope you enjoy it. I thought initially that we'll actually play during class, but I realized it's too difficult and distracting. So we'll just leave it for you guys to play. If I find any other fun games about finances, I'll be sharing those with you. All right. Moving on. Will we have a college webinar to the 12th session? Sanjeev asked, no, actually the college webinar will be a part of the 12 sessions. So instead of being the last session, it just will be this Thursday. Again, the college webinar is about college planning and admissions, and we have an admission counselor. For those of you who joined in late, we have an admissions counselor from Penn State. He is an Ivy Leaguer, and he's helped a lot of kids get into Ivy League colleges. And he'll come in here and talk about what you need to do or build your resume, how you need to build your resume to be eligible or to get in Ivy League, not just get in, but also get aid in a lot of these Ivy League colleges. So it will replace our 12th session. So essentially we'll have 11 sessions plus this college webinar, which will be May 7th at 7:30 p.m. Central. Please be on the lookout for registration. I'll be sending that out today. So the assignment last week was to look at your parents' credit scores, look at the credit report, see what factors affect the report positively or negatively, and come up with a plan to build your credit before you go to college. So how many of you have a plan to build your credit before you go to college? Raise your hands. Wow, that's pretty impressive, guys. I'm impressed. Good job. I see a lot of hands going up. That's amazing. So I want you guys to tell me now in the chat box, what is your plan? Tell me about some of your plans. What did you come up with your parents? What did you learn? Okay, what did you learn from your last assignment and or the game, and what is your plan? Yeah, that's a great idea, Malcolm. I love that. Instead of paying everything with a debit card, you buy it with a credit card and instantly pay it, right? Like pay it off after your credit card. You don't want to instantly pay it off. You want to wait until the statement is processed, the next statement, and pay off in full at the next statement, okay? Taking loans can help your credit score. Absolutely, that's true. Not to get into debt. Remember, guys, there are good debt and bad debt. Okay, good debt is when the debt makes income for you, like you buy a rental property and you go get a mortgage. That's good debt because that money is being made in the rental property, which pays the mortgage. To get a credit card and pay it off quickly. Car loans. What about car loans, James? I learned about my parents' credit score. Yeah, there is no credit score in cash flow. That's right, Urjit. You learned about your parents' credit score. So what did you learn about your parents' credit score? Buy a fourplex in one of the houses and get the money from the other three. That's an amazing observation, Deepika. Or I think it is actually Shubhansh, right? Is logging in with his mom's account. So what happens is when you, let's say, buy a fourplex with 4 houses and you rent 3 of them and live in the 4th one, your 3 will probably pay for you to live there without rent. That is an awesome idea. You need to spend a little bit of money to have your credit score go up through your credit card and debit card. Sort of. I mean, you spend money, but you pay it back, right? So you spend money on things you need to buy, like you want to go groceries, you can't live without grocery shopping, right? So you go spend money on your credit card and pay it off when your statement comes and don't pay the interest. There's a semi-easy way to build a credit score. Great. I learned what a credit report means. Okay, good observations. I like all of those. That's right, Katie. You need to spend money to be able to build a credit report, but then think about it as you're not spending money for the sake of spending money. You're spending money that you would anyway. You just don't pay cash for it, okay? Cash transactions don't build your credit. Credit card transactions build your credit. So you want to build your credit, okay? So today's lesson is on bank accounts, debit, and credit cards. So what are we going to learn? So we learn about the different types of bank accounts. So how many of you have a bank account already? Raise your hands. That's awesome. That's a lot of you. That's great. What kind of account do you have? Do you guys want to type in this chat box? Savings, debit, checking and savings, checking and savings. Okay, awesome. A lot of you have some kind of savings account. That's great. So there is nothing like a debit account. It's essentially a checking account. Okay, debit account, basically debits from your checking account. I think I have a savings account, but I can't really use it. Why can't you use it? We need to fix that, Urjit. All right, awesome. I'm excited to see how many people have accounts. That's awesome. So I have here two kinds of accounts that we talked about. We have checking account. So essentially it's where you deposit money and you withdraw it using checks, debit cards, or ATM cards, right? And we'll talk about the difference between ATM cards and debit cards as well. Then we have a savings account. It usually earns a higher interest in savings account than an interest-bearing checking account. So your savings account will invariably come with a higher interest rate, but honestly, guys, nowadays it's almost nothing. Because remember we talked about the federal funds rate, it's really, really low, and those affect all these rates, right? So it's really not very much that you earn anymore in a savings account, unfortunately. The savings account also, sometimes they limit the number of transactions or transfers that you can do or withdrawals you can make every monthly cycle. So let's say I have a 1 month cycle, they might say, hey, you can only do 10 transactions or 20 transactions in that cycle. So you have to be careful not to exceed the limit. So the other two types of accounts that I use more of the money market accounts because they have higher interest rates, right? Than your savings and check-in, because savings and check-in are really minimal. Again, money market isn't that high, but it's better than savings and check-in, right? I don't keep a bulk of my money in savings and check-in. I move it to a money market account that usually pays, let's say, maybe a 2% interest rate right now, which is better than 0.001, as someone mentioned, right? Money market account, MMA is a money market account. It's the same as a money market account. So the difference is it's a type of savings, but it's invested differently. The banks treat it differently. And it's also, actually, I should say FDIC insured here. I forgot the word insured. All of the bank accounts, guys, are insured by FDIC here. And I'll talk about that in the next slide. So the other one I want to mention today is certificates of deposit. It's also called a CD, okay? CD, certificates of deposit. So it's offered by banks and credit unions, which offer usually a higher interest rate, but there is a catch here. In exchange for the higher interest rate, you have to put aside a lump sum of money and not touch it for a fixed period of time. So the longer the time, the bank pays you a higher interest rate. Let's take an example. The bank says, hey, Kavitha, if you want to put in money, you have to put in $25,000 or 10,000, let's just take $5,000. So you have to put in $5,000 and you have to leave it there for 12 months. You can't touch it, right? Like, so if I need money immediately, there are ways to get it, but you don't want to really touch it if you want to get that interest rate. So usually CDs come with a fixed, very important here, they have to be untouched or kept for a fixed period of time. And that period of time depends on the CD you buy. So essentially the longer the time period, the higher the interest the bank is paying. Think about what the bank does. They get $5,000 from each person like you. If they have 100 people, that's $500,000 that they got, right? Now they take it and they go invest it somewhere else. They loan it out at, let's say they pay you 4% and they loan it out at 6%, and they keep the difference in the percentage, right? They pay you 4%, then they loan it out to someone for 6 to 7%, and they get basically the difference between the interest rates on the money. So the longer they ask you, let's say you say 5 years, up to 60 months, then the higher the interest rate they pay. I don't even think they pay 4% right now. I want to say all the CDs are maybe 3.5 at the most. There is a minimum deposit for CDs generally. I'm not really sure what the minimum deposit is. It depends on the bank. It depends on the credit union which is offering it, but there's usually a minimum deposit, yes. So all the bank accounts are insured by FDIC. FDIC is what I mentioned here, Federal Deposit Insurance Corporation. Remember I talked about insurance a lot the last 2 weeks ago. And your accounts are all insured by FDIC up to 250K limit, all these four kinds of accounts. What that means is that every time you put in, let's say you put in $100,000 in an account, if let's say the bank goes out of business, right, your money is not going to go away because your FDIC will cover, the insurance will cover your money. So you don't want to put it in a place where it can evaporate if the bank goes out of business, right? So this is a kind of insurance that automatically comes with your bank account. You don't have to buy it, okay? And this limit is per account. So let's say I have more than $250,000 in an account. It's probably better for me to open another account and put it in, because if let's say I have 300,000 in an account, my insurance limit is 250. So if the bank goes out of business, they're not going to pay me any more than 250. Okay. I hope you all have that kind of money in your bank account. So you'll have to create multiple accounts. Let's talk about ATM and debit and check cards. So they're all kind of doing the same thing, but nowadays you don't see as many ATM cards. So earlier when I started opening a bank account, they didn't really have a concept of debit card. A debit card was basically called an ATM card. What it allowed you to do is you would go up to an ATM machine, you know, those machines where you can get cash, and you enter your PIN and you get cash out of it. Now they have these debit cards, which are ATM cards, plus they have a Visa or a MasterCard logo on them. So they can literally be used and swiped like a credit card anywhere, and you don't need your PIN number unless you're withdrawing cash. You know, you don't need to enter any PIN number for debit cards. So that's really the only difference. Most banks nowadays just give you a debit card. They'll always have a Visa or MasterCard logo on them. So you don't see just a pure ATM card anymore. You just see debit cards. So debit cards are also called check cards. And there's a question on, can you take loans on a debit card? You really can't take a loan on a debit card, because a debit card, what it's doing is, instead of being a loan, it's actually taking your own money out. So let's say you open a checking account, you put in $1,000 there. The bank will give you a debit card and say, hey, you can use your debit card to access your own money. So it's not a loan from someone, right? You're using your own money. Every time you swipe, let's say you go swipe $400 worth of purchases in a grocery store and go buy shopping clothes or whatever, then your bank account will show all of that, and it'll actually show $600 now instead of $1,000 that was there. So remember, you're not getting a loan with a debit card. You're just spending your own money, okay? Because you're spending your own money, there's no interest on the money, right? There's no interest. You're paying like a credit card interest because you're using your own money. It's just coming out of your money. And I mentioned this, you usually have to PIN number to use an ATM card, but not a debit card for purchases. So let's go, I go grocery shopping and I swipe my debit card. I don't need to usually enter a PIN number if it has a Visa or MasterCard logo. It just automatically withdraws. But let's say I want to get cash back, you know, then I need to enter my PIN number. So the PIN number is a number that's known to only you, hopefully, that you can use to access money from that bank account. So it's kind of like a cashback system where you say, hey, I want $100 extra from my bank account to carry cash with me. So that's when you need a PIN number. So how is it different from an ATM card? An ATM card doesn't have this Visa or MasterCard logo, a pure ATM card. It's just a cash card. So you just go, you always have to enter a PIN number and you get you get either cash, or you can even pay for a purchase like a debit card, but you cannot pay without a PIN number in an ATM card. When you have the Visa or MasterCard logo, you don't need the PIN number anymore. That's the difference. That's exactly what it is. A debit card is like an electronic check. That's a great way to think about it. Instead of a check, it's an electronic check. You just go swipe your card and it takes it out of your account. Okay. There's an overdraft. So let's say you put in $1,000 and you go out on a shopping spree and you spend $1,200 and you bought this expensive TV and all that stuff. So you'll end up doing what's called an overdraft, which is withdrawing more than what you have. So remember, you have only $1,000. So if you spend $1,200, you're going to overdraft and the bank will charge you for the overdraft. At this point, you're taking money from the bank that you don't have. Okay, that's not good. You'll end up paying a lot of fines. Okay. Any questions on debit cards before we go to credit cards? If you go into overdraft, it's kind of a loan. Yes, that's right. That's why they charge you a lot of fees on it. But if it doesn't go into overdraft, then you're just using your money. There are no fees. Okay. Doesn't removing a PIN ruin security? You don't know. It doesn't remove security necessarily. It's kind of like, yes, it does, because it is taking, when you use a debit card, it is taking money out of your bank account directly. So it's kind of insecure in that way. So you want to be careful about keeping that card and not losing it, right? Like someone else can go swipe it. But nowadays in a lot of places, they ask you to enter your PIN, or not PIN, but your zip code and stuff when you go to a gas station. So they kind of prevent the misuse a little bit. Okay, I think we've answered all the questions. Oh no, there's more questions here. Can you get only an ATM transaction with the checking account? Pretty much, yeah, you can do ATM and debit cards. Can you add money to a CD during a period? Usually not. The CD is fixed and then you can't add more money. You'll just create a new CD, okay? So let's say I have $5,000 in a CD and I have 5,000 more. I just end up getting a new CD. Is the thing on Thursday 8:30 Central Time? No, it's at 7:30 Central Time, or college admissions. 7:30 p.m. Central. Can a debit card be used as a credit card? You kind of can, right? Like I mentioned, all these Visa and MasterCard logos, they work like a credit card, like in the sense that you can just swipe it without a PIN. But the problem is, it's not like a credit card because it's not a loan, right? You have to have money in the bank to pay with a debit card. That's the main difference. It's not a loan. Nobody's giving you a loan. And nobody's charging you interest unless you overdraft. Why was I supposed to put in my name? Oh, it's just to introduce yourself. Nothing much. I thought you couldn't take out more money than you have. That is right, Amaya, but there is something called overdraft protection. And they do sometimes allow your transaction to go through, but you have to put in the money as soon as possible. And you also get charged maybe a $35 fee for that, okay? Generally, you don't want to put in, take out more money than you have, okay? But there is a clause which allows you to, the overdraft. How high of an interest when you get card cash from a credit card? We'll talk about this. I haven't talked about credit cards yet. I think I got all the questions. Can you choose the interest rate if you have good credit? We will talk about credit card, okay? What's the purpose of credit card if you just have debit cards? I like this. Because a debit card is not a loan, Vishnu. A debit card is essentially allows you to only access your own money. But let's say you want a higher amount of money, then you need a credit card. Also, very important difference. You'll never you cannot build your credit using a debit card because it's not a loan. Only taking loans and using credit cards will help you build your credit, because now you have to repay those loans back. You're not going to repay yourself back, right? Your bank account has the money, you're just withdrawing it. So you want to have a credit card as well. Yes, credit card allows you to pay more than you have. Sometimes when you run out of funds in your account, it allows you to still charge on the credit card, and then maybe you'll get paid the next week and you can pay it back. So let's say you're only $1,000 and you have to pay rent for $1,500. Maybe you don't have enough money, so you can borrow against other sources when you need to pay. Although I would never pay rent with a credit card, but I'm just saying. So credit card allows you, let's talk about credit cards, okay? Credit card is basically a line of credit, which is nothing like a line of credit. Essentially means an amount of money that can be borrowed. So bank says, hey, your name, whatever your name is, I like your credit score, or you're a good person, you've done well, you've been responsible financially, I'm going to allow you to charge up to $5,000 on this card because I trust you to pay it back to me. It's basically the bank or the lender saying, I'm going to give you a certain amount of money, which is called the line of credit, that you can charge to buy things. And then you can pay me back and I'll charge you a certain interest rate for it, right? Money is not free. Money is always borrowed at an interest rate, and credit card interest rates are super, super high. Generally, it could be anywhere from 10% all the way to 20%. That's a lot of money, okay? And you're essentially borrowing money to pay for things. The difference is in a debit card, you're using your own money to just swipe and pay for things. Here, you're borrowing money from somebody else, right? Usually it's a bank, like Citibank has a credit card, Bank of America has a credit card. There are lots of credit cards out there, like American Express has a credit card. So the monthly payments are due in this point. When let's say I go charge $1,000, they're going to send me a statement every month and say, hey, you owe this much money. This is, if you don't pay it, this is the amount of interest that will happen, that will come to you. And I'm going to talk about all of that right now. You can also get cash advances. So you can actually go swipe your credit card and enter a PIN number. In that case, you always need a PIN, and you can actually pull cash using your credit card. You never, ever want to do that. In all my life, I've used that once in an emergency when I was stranded in a foreign country, but never do that, okay? You don't need to do that because they charge really high interest rates on it. If you never pay the loan, they will come after you. They will put you in collections and it'll screw up your credit. Most of the banks offer a credit card, okay? Higher than ATMs. What do you mean by higher than ATMs? ATMs have no loan. They're not a loan, okay? Okay, let's talk about credit card benefits and I'll come to the questions. Some of the benefits are convenience. You don't need to carry cash or checks. Yes, you can use debit cards as well for the same kind of convenience, but the big difference is debit cards don't allow you to build credit, right? Credit cards allow you to build credit, and you know that credit scores mean, you know from our class on credit scores are important for any kind of loan. Like tomorrow you want to go buy a car, you want to buy a house, they are looking at your credit. So if you always use a cash or a check or a debit card, you're never going to build credit, okay? The other advantage is cashback and other rewards. A lot of people don't realize this, but there's a lot of good credit cards out there. Like I have a credit card that I pay every year. I pay them $450. Why do I pay them? They actually pay me back $300 when I use it for travel. So I travel quite a bit and I get that $300. They pay me $100 to go get some other things that I need for my travel. So I get all of that money back, but they also give me cash back. Every time I swipe, I get like 1% back on whatever I charge against the credit card. So I actually get cash back and other rewards from the credit card, and all my Amazon spending is from what I get, the rewards I get on the credit card. So you can use it well, and you can use it badly. So I want to teach you how to use it well, okay? It also provides protection from credit fraud. The problem with debit card, is one Vishnu pointed out, is someone can go swipe your credit card and remove money from your bank account. That's not a good idea, right? You don't want it to be that open. But with a credit card, the money is not coming from your account. It's actually just a loan. And if someone else finds your credit card and uses it, it's fine, because you just call the bank and say, hey, I want to report a fraud, my card been stolen, or sometimes online, you still have your physical card with you, but the number has been used online for buying something. So I had it at least 5 times so far, and the bank just refunds everything because they also have insurance against fraud, right? The other big thing is you can't pay for things when funds are not available, right? When I was in college, I didn't have enough money. I was broke. So I suddenly needed to buy something like grocery shopping, and I didn't have any money in my account. I can't use a debit card. And I did pay for it with credit card, and I paid it back when I had the money available and my paycheck came in. And sometimes you might need it when you don't have emergency funds, right? The idea is that you can use it, but responsibly use it. I know people who have thinking, oh, I have a $10,000 limit. I'm just going to go spend $10,000 and then pay it whenever I want. but they end up paying so much in interest that it's not worthwhile. Okay, they dig themselves a hole they can't get out of. So I want you guys to be very, very careful. Okay. So Anirudh asked, when we use a PIN, if not in a debit or credit card, you actually use a PIN when you pull cash out from either a debit card or a credit card. So you have to enter PIN when you're pulling cash at an ATM machine. Or when you pull cash, when you go to Costco and swipe it and they say, hey, I want a $50 cash back, then you have to use your PIN number. Yes, pretty much. That's the only time. So credit card interest is, credit card is essentially a short-term loan that needs to be paid back, right? You're taking a loan from the bank, but it has what's called an APR. We talked about APR before, which is essentially the interest rate on this loan. So the APR is determined by your credit score. So if you have a high credit score, you'll get a low APR, which means low interest. It's also dependent on the credit card. Depending on the company that's giving you a credit card, they're going to give you a low interest or a high interest credit card. But generally, all credit cards are much higher than other loans that you can get. Let me give you an example. A car loan might be 2%, right now. You're talking about a credit card loan, which is a minimum of 9.9%, maybe 8. I don't know if there are even 8% credit cards, but usually it's over a 9. Someone with a strong credit history may have a lower rate than someone with little or no credit history. So let's say you start out and you want a credit card. The only kind of credit card you can get is probably a secured credit card. And we talked about secured credit card last week. It's essentially kind of like a debit card, but it's actually a credit card. You have to put in some money first, and then you can use it like a credit card and build your credit. Okay. A lot of times you might need that, or you might need an additional card from your parents to build your credit. Some of the do's: use it well, right? Use credit cards to build your credit history, be responsible and on time in your payments. What I recommend is don't pay back the credit card immediately as soon as you swipe it, or even after a week. Wait for the statement. On the statement date, let's say the statement comes out on the 23rd of every month. You set up an account and transfer the money to it on the 23rd, not later, okay? The due date or a couple of days before the due date of the statement of the payment, you pay it in full. Your banks will report your payment history to the credit unions, not the unions, sorry, this is not these are the credit companies, right? We talked about Equifax and Experian and TransUnion. They report them to the credit bureaus, okay, not the unions. And that affects your credit score. That builds your credit score. If you don't pay it on time, then it hurts your credit. The credit card will tell you, oh, you just have to pay $50 a month. And I don't want you guys to do that, because the other money that you've spent on it will accrue a lot of interest, and the interest is going to kill you. Use it every month for convenience and pay it off in full. Look for credit cards with a high percentage of cashback and rewards, generally ranging from 1 to 5 on purchases of various things. So like I have a card which will give me 5% cash back on gas. So every time I go fill gas, it gives me 5% back for nothing, right? It's great. I'll take it and I'll pay it back, right? I'll pay back the entire amount on the credit card and I won't pay them a dime in interest. That's what you want to do. Some things you don't want to do with credit cards: don't use it to pay for things you can really afford. Let's say you want that huge TV and you don't really have the money for it. Don't buy the TV. Save the money for the TV. Then you go use a credit card to pay for the TV, get your points and rewards. And when the bill comes, you pay it off in full. Okay, because now you have money in your account to pay it off. So don't buy things that you don't have the money for. That's really a rule. Okay. If I want you to take away something, remember, don't pay for something you don't have the money for. Unless, let's say you have to pay school fees. You know, when you go to college, you have to pay college fees. Fine, I'll make that exception, but pay it back and don't accrue interest, okay? Credit card APRs are generally 19 to 20%, which is higher than most bank loans, 5 to 8%. So don't keep credit card balances, pay it off. Sometimes they'll tell you, oh, it's 0%, you know, you don't have to pay anything more than 0%. Those are usually called teaser rates. They only last for a certain amount of time. Like a max I've seen is maybe 1 or 2 years. Don't fall for them and don't forget about them. If you want to make use of them, that's fine. Remember, you'll still pay a 3% fee on this when you use a teaser rate. They'll say, oh, transfer your credit card balances to this credit card and we'll give you 0% for 2 years. Then you make use of it, but remember, it'll cost you 3% of whatever you're transferring. To transfer it, it'll cost you 3%. But it's still not bad, right? It's better than paying 19%. So what does a statement usually look like? So you'll have your account number, and usually the entire account number will not be on the statement because it can be misused. So it'll be XXXX and you'll have the last four of the account number. You'll have your closing date, which says up to 11/9/2013. This is tracking all your charges on the credit card for that month. From usually it'll be like 10/9 to 11/9. Okay, it'll be a month before. You have something called a credit line here. What is a credit line? This is the amount of money that they allow you to spend on the credit card. This is $2,100. You have available credit, which is you have not used all of your 2,100. You've only used 2,100 minus 1,578, right? You only use some $400-500 here, and you still have available 1,570 something dollars to spend. That's your available credit. So the other thing I want you to remember is never to max out credit cards because they will hurt your credit. There's something called credit utilization. And if you remember from last week, you want your utilization to be very low. So you want your credit line to be very high and want you to use it very less, okay? If you have to use multiple credit cards to increase your credit line, do that and it'll improve your score. But don't use too much of the credit available. Yes, there will be a quiz today. There's available credit, there's payment information. This says, okay, this is how much you charge, this is how much you paid, this is how much you spent. Remember, I told you $523, that's how much you spent this month, okay? And the new balance is $523. Last month, you had charged $1,600 and it paid off everything. That's great, right? No interest. Do you see? No interest paid because you paid it off in full. You have a new balance and they'll say you scheduled payment amount, $35. Never pay the scheduled minimum payment because what happens is if you pay $35, then the rest of this money, 523 minus 35, will all be interest, charged interest. And the interest rates are really, really high. How high are they? You see that 19% there? That's high. When you take money out, like cash out from a credit card, it's 21%. You don't want to pay that kind of interest rate, right? So never pay the minimum balance like this and never pay this kind of interest rate, guys. It's very expensive. Okay, these are all the transactions. You want to make sure every month you go through your transactions and make sure that they all look correct and it's everything you've spent. The other thing I want to point out, and you can go back and look at these, there was this something called Credit Card Act of 2009. It actually told you the true cost of borrowing money. Like earlier people used to just charge credit cards and they didn't realize how much interest they're paying. So they have to give you an idea here saying there is a warning. If you pay the minimum payment, then this is how much it's going to cost you to pay this off. They have to give you a warning now. Okay, that was required as of the Credit Card Act of 2009 because a lot of people were doing minimum payments and getting so much in credit card fees that they weren't able to pay it ever off. Okay. Then there'll be a payment coupon here, but honestly, nowadays we all don't use this. You don't send in paper checks anymore. You just do an electronic transfer from your bank account to your credit card. Okay. So what do you do when your credit card is stolen, lost, or misplaced? So all kinds of credit cards and debit cards and ATM cards, if you ever stolen, lost, misplaced, report it immediately to your bank. Okay, what they can do is they can block it or they can cancel it until you get one or you find one. Okay, find it again. So let's say you've been at home and you misplaced it. It's okay. You call them, they block it. So you don't know where it is. It's better to block it, right? Fraud is very, very common and things can be misused. Happens all the time. Okay, before we get to the assignment, let's go through the questions. There are lots of questions. Can you borrow a line of credit? Yes, you will borrow against a line of credit. So the bank will give you a line of credit based on your credit history, and you can borrow against it. What is the average interest for a CD? I want you to go to bankrate.com. Let's look at it. Can you guys go do some investigation? Someone go to bankrate.com and tell me the interest rate on a 6-month CD. Go to bankrate.com and look up a 6-month CD and tell me the interest rate. Or go to bankofamerica.com. Any bank and tell me the interest rate for a 6-month CD. I'll let you do that in the background, okay, while I go through this. Can you borrow against a line of credit? We answered that. Why don't people use debit cards for their small transactions and use the credit card only in a scenario when they need it? Because it's just convenient to use one card and not have, personally, I don't use debit cards because I want to earn a lot of cash back. And I like to track all my spending on one card. Like I have a card for all my personal spending. I have a card for all my business spending. So I keep them all separate and I track all of them and then I pay them off all in full. So I don't want to use multiple cards unless they're for different purposes. So it's all a tracking thing and I love my cash back, okay? Urjit says it's 1.25 for a 60-month, 5-year CD right now. Is that a 5-year CD, 60-month CD, Urjit? APR is annual percentage rate. Okay. So look up a 60-month CD. Oh, 6-month. Okay. 6-month CD is 1.25. Look up a 60-month CD, size 60. That should be higher. Okay. Longer the CD, the higher the interest. Why don't people use credit card? Okay, we answered that one. So it depends on your convenience. And remember, you want to use your credit card so you can build your credit history, especially when you start off, okay? The average interest for the CD depends on the length of period. So the 6-month CD will not give you as much interest as a 60-month CD, okay? So credit card is basically a debit card, but you pay later. Not really. A credit card is a loan. A debit card is money you're taking from yourself. Big difference. Is credit card worth the interest on the fees from credit card transactions? So you don't pay fees if you pay it off in full every month. So let's say I get my statement on 23rd and it says, hey, you're due to pay by the 30th. If I paid by the 30th, I pay 0 interest, guys, 0 interest. Okay, the same month, 0 interest. So you don't pay the interest unless you leave money on the credit card that you haven't paid. Why do they give rewards when they lose money? They kind of give rewards as an incentive for you to spend, but smart people spend it and pay it off. Okay, people who are not smart, they spend it and pay them a bunch of interest. So they make more interest than the rewards. But I don't pay them interest, so it's okay. What if you don't pay the fee at all? What fee are we talking about? I'm not sure. What is MMA? MMA is the money market account. What is APR? Annual percentage rate. It's the interest rate on a credit card that it actually works out to be, APR, okay? If you lose a credit card, can it affect your credit score? No. It cannot. So when you lose a credit card and someone charges it $50,000 on a credit card, it can hurt you if you can't pay it back. But you call the credit card company and tell them, hey, my card was misused. I didn't charge this $50,000. And they will put it in fraud and they will not affect your credit score. So overdraft fees are when you use more money than you have in your bank account. It goes into what's called overdraft. Okay. Thank you, Sanjeev. I love doing these webinars. Okay. Thank you. Do you have to pay back rewards? No, you don't have to pay back. That's the beauty of it. You just earn the rewards and you get to spend them. You never have to pay them back. What is a money market account? Money market account is a high interest account which is used for saving your money. It's higher interest than a typical savings account. We are going to pay the quiz right now after we answer all the questions. What if someone says they didn't charge it but actually did? You don't want to lie, right? If you did charge it, they're going to verify it. The credit card company isn't just going to give you money back because you say, hey, I didn't spend this money. They're going to track the merchant who charged it, and they're going to verify who charged it, how it was charged. They're going to do their own investigation. They're not just going to take your word for it. But if it is truly a fraud and your credit card was compromised, they will pay for it. Okay. They will do some investigation though. So you don't want to lie to them. Okay. Thank you. Thank you for your feedback. What is the homework? Can I please see a slide on it? Yes, I will send it. I will be sharing this slide. Okay. If it was fraud, but they don't believe you, they have to believe you. They don't have a choice, right? If it is fraud, you will prove to them that it is fraud. And I've never had an issue with that. Okay. I am going to share the quiz right now, and I'm sharing the assignment right now with you guys. Look at your screen, please. I want you to find out what kind of bank accounts your parents have. Sit down with them and look at what different kinds of accounts they have. What kind of interest rates do they make on those accounts? What kind of debit cards and credit cards do they have? How do they use them? Do they pay them off in full? Do they use them every day? Is there a credit card they like to use, or do they like to use debit cards? Do they pay it off in full? Do they have balances and pay interest? I want you to look at a credit card statement. Ask them for a credit card statement and look at all the pieces of information that I told you. And I will share this with you in your assignment. I hope everybody's getting emails with their assignment because I am sending it out. So look at this. I want you to look at all these things on your parents' credit card statement and identify all of these, okay? And I'll send you this particular screenshot and also a screenshot of the assignment in your email. And you will get it within 24 hours of this webinar. I always send it. And I just want to make sure that you get it. And if you don't get it, look in your inbox, look in your spam folder, look in your promotions folder on Google, wherever you are. Make sure you're getting it and move it to your inbox. And you need to basically tag my email address as somebody you want to receive emails from. So I want you to figure out if they have any kind of cashback or rewards. And also we talked about how you build your credit. I want you to talk to your parents about whether they can add you as an authorized user on their credit. So I actually did an interesting experiment. I went and pulled my daughter's credit report, or tried to pull it, and they don't allow you to pull your credit until you're 16. You can go to Experian.com and pull your credit if you're over 16, and you can actually see what you have. Your credit score might not be looking very good, but don't worry about it because you have to start somewhere and it's okay. But you can pull your credit if you're 16 and over. So once you do that, you can ask your parents if you're 16 to add you as an authorized user and report your credit, your social security number to the bank, and ask them if you can use that credit card, that extra credit card you got, to build your credit. And some banks will allow you to do that. That's a great way to start, okay? I will always share the webinar recordings on my website, so everybody has a link. And we have 5 more minutes, guys. I want to go through and do the quiz and also give out, there's a raffle. Remember, we have the best. We have 2 $5 gift cards, one for a middle schooler and one for a high schooler today. So it's quiz time. And the code is, I'll be sharing it. Give me a second. Go to joinmyquiz.com and wait there. Give me a second. I'm going to have to stop the quiz and then you can see the quiz code, okay? Ah, sorry, give me a second. This thing wants me to log in again, so give me a couple of seconds. We have 14 questions today. And you have 60 seconds to answer each question. I think it's a fairly easy quiz today. If you paid attention, you should be able to do it. Ouch. Can everybody see the quiz login and password? If you don't see it, raise your hand. Shankar and Deepika, look in on the slideshow. It is joinmyquiz.com. Somebody, can you copy and paste it for them or type it in for them in the chat box, please? Joinmyquiz.com 265369. If you got it, then please unraise your hand. I don't want to see any raised hands unless you didn't get it. You can click on raise hands again and unraise it if you got it. Varchas, you didn't get it? If you didn't get it, let me know again. The code is 265369 is joinmyquiz.com. And I'm going to start the quiz now. A couple of seconds, please. Let me unshare this and do a new share. Can you guys see my screen where I'm sharing the quiz? I'm seeing 38 people in there. I'm missing 6 people from the quiz. Who am I missing? 44 people. I expect to see 44 people on the quiz. I see 40. I see 4. I need 4 more people. Who are missing the link? Joinmyquiz.com 265369. I have 40 people. I'm missing 4 still. Okay. Get a charger. Your battery is 2%. Okay. We have 41 people. I'm going to kick this off because we're running out of time. You guys ready? Everyone ready? Say yes. All right. Okay, cool. Go. James, I love your name. James, that one before. If you have finished the quiz, just raise your hand, please. Okay, I don't see a lot of hands raised, so I'm still gonna wait, okay? Please hit the raise hand right after you finish the quiz, okay? James, what's your question? Please type it in the chat box. A lot of people haven't finished the quiz yet, so I'm still gonna wait for a little bit. It says how many are done at the top. It does? Okay. I'm not sure what this, when it's done and not done because, oh, where does it say how many are done? I really can't see it. Oh, 39, 40. Okay, thank you. Thank you, James. I didn't see that. Jenny, thank you. Yeah, I see it now. Thank you, guys. 40 out of 45 done. Thank you. I didn't realize that. Thank you. You guys are much smarter than I am, so thank you. All right, 5 more people. People who haven't done yet, please raise your hand. Everybody else, put your hands down. Everybody's. All right, 40 out of 45 done. I'm gonna move ahead now. If you guys are not done, you should have been done by now. Okay, I'll give you another minute. Let's do this. For debit cards, are there checking accounts? Yes, James, if debit cards remove money from a checking account, okay? So always you have to have a checking account to have a debit card. Okay, Janil and Akshat are on the top. Janil, who's a high schooler here? Janil or Akshat, are you high schoolers or middle schoolers? Janil is high school. Akshat? Akshat, is that Sri Devi? Is Akshat? Yes, okay, cool. So we have, perfect, one high schooler and one middle schooler on top here, who are on top here, and they will both, please email me after this quiz and I'll share my email address with you. I will send you a gift card. It's usually an Amazon, Steam, or Starbucks gift card. If there's something else you want, I will send you a gift card, okay? And last week, I hope folks who won got the gift cards from me. There were 2 people and I sent 2 gift cards last week. So quick, let's go through it really quick. When I buy something using this card, money is withdrawn directly from my checking account, and the answer is debit card, okay? The credit card is a loan. It doesn't come from your checking account. A lot of people got that wrong. On this card, each purchase is a loan that is repaid later. Like I mentioned, credit card is a loan, debit card is not a loan. So it's credit card, the answer. Interest may be charged on this credit card, on this card when you purchase things and don't pay in full. The answer is credit card, okay? If the card is lost or stolen, report it immediately. And the answer is both. Any card which is lost, you need to replace it and report it immediately, okay? A checking is an interest-bearing account where your deposits remains for a set period of time, an account where money can be easily deposited and withdrawn in terms of checks, debit cards, and ATM transactions, a computer that checks your email account. So the answer is obviously the second one, okay? It's not a deposit for a set period of time. That is something else, and we'll talk about that. I will get a bill I have to pay at the end of the month for this card. Which one is it? A credit card. A debit card, you get a statement, but not a bill. There's no bill because you're not borrowing money. More useful when you're short on cash in an emergency. It is a credit card because it is a short-term loan, guys. It's not a debit card. When you don't have cash, you can't use a debit card, right? I have $360 in my checking account. So that's the most I can spend using this card. It's a debit card because if you don't have money, you can't spend using a debit card. So you could only spend $360 if that's all you have. I get some cash back when using this card. It's a credit card. Debit cards don't give you any cash back for using your own money. I bought a television using this card and I had to pay an extra $80 because I didn't pay my entire bill right away. And the answer is credit card because you are taking a loan for paying your television and then you're paying interest $80 because you didn't pay it on time. I'm not carrying any cash with me, so I can pay using this card. Both of them can be used to pay when you don't have cash. Okay, both, the answer is both. A lot of people got that wrong. You can pay using credit card and debit or a debit card. I use this card to withdraw money from my checking account using an ATM machine. It is a debit card. You can also use an ATM card, but an ATM and a debit card is almost the same, except the debit card has the Visa or MasterCard logo on it. This is just like using a check, except I don't have to carry my checkbook with me everywhere I go. So that's a debit card. When I put my money in here, I get a higher interest in exchange for leaving it a fixed amount of time. And that's called a certificate of deposit or a CD. And that's it for today, but I have something else before you guys leave. I have a quick poll. And I want you to answer this poll, okay? Where's my poll? Okay. Give me a second, guys. I want a quick feedback. I need to know what I'm doing right, what I'm not doing right. So if you can tell me and email me later, I'll really appreciate that. Just give me a quick feedback. I know a lot of you have dropped off, but if something I can do better, I want to learn about it, okay? If it was useful to you, ask your friends to join us because I want to educate as many people as I can on these webinars. All right. The last thing is the people who won, are you guys still online? I just want to give you my email address, kavitha@cherrystreetinvestments.com. Please email me so I can send you the gift card and tell me what kind of gift card you want, okay? And the last but not least, if you guys want to join, we have a Facebook group. If your parents want to join, they can join us. And it's Facebook group, facebook.com/group/Moneywise Learning. And I will be sending out emails with all the homework. And please do your homework because that's how you learn. And thank you all for joining. Have a great evening. Bye. See you next week at the same time, 4 p.m. And don't forget to join us for a webinar on Thursday, 7:30 p.m. Central, if you're a high schooler or a middle schooler who's interested. Thank you. Is there any questions? Checking your credit score does not affect your credit, Amaya. Bye. See you guys.